Welcome to Morpheus Trading Group. In today's technical presentation, we're going to be analyzing the broad market in light of yesterday's massive sell-off. As a proxy for broad market, we're looking at the S&P 500, $SPX.X. And you'll notice in this chart that the long-term uptrend line going back to when the rally started, this broad market rally began in March of 2009, is represented by this black line right here. And of course, you also notice that corresponds with the 200 period moving average. We're going to be discussing a few things here. One, notice how every time we've come into this 1350 mark, roughly 1350 to 1360, we formed massive intraday reversal candles and sold off sharply to close at the lows of the day. We did it here, here, and here, and of course I've highlighted that in light blue. And what's important about this is that it's telling us that when we are getting to this critical resistance level, that institutional players are stepping in and selling the market off very sharply. There's no desire right now to own at higher levels. Now, of course, we're still in this trading range, bound by about 1260 at the low, about 1360 or so at the high. However, this type of price action does not bode well, and in combination with the fact that there's a lot of volatility, that we're having pretty sharp whipsaw moves. Volatility is not the friend of a market, a bull market. It's a much more bearish activity. In a bull market, what you would want to see are breakouts such as this, a 4 or 5 day very sharp rally, but then a period of consolidation in a very tight range. Not much of a pullback. For instance, we might have pulled back to here, but then we moved sideways for an extended period of time, maybe 3 or 4 weeks, and then to be followed by another breakout move. But when you get volatility like this, it's telling us there's indecision in the market, and one must be very careful on the long side right now. Of course, it does not help that stalemate in Washington, and certainly the market doesn't like indecision in Washington, because that just places pressure on fund managers to protect positions, and of course there'll generally be a flight to cash. Now, with this vicious move down yesterday, this was accompanied by approximately 600 stocks, a little over 600 stocks, that were down 4% or more on the day. And normally, if we see 300 to 400, that's a pretty bad day. 400's a key mark. If we see 400 stocks down on a given day, or for that matter in an uptrend, 400 stocks up on the day, that gets our attention, and that's an important number. But to have 600 stocks sell off, that's a very, very negative internal when you have 600 stocks sell off 4% or more on the day. And there's been a lot of damage done to a lot of stocks now, where they've broken stocks that were prior to this trading above their 200 period moving average, or maybe undercut it for the first time in the past, let's say month and a half. Those stocks are now well below their 200 period moving average, which means the traders are going to be viewing those stocks as shorting opportunities, which of course the more stocks that fall into the category of below 200 period moving average, the more shorting activity that you're going to tend to see into rallies. So the market internals are beginning to erode here, and we have to be very careful on the long side. These horizontal lines, dashed horizontal lines, represent support levels in the market, and basically we've drawn them across swing lows, such as here. These swing lows right here. Notice how the market's managed to hold support to some degree and bounce off of the 1300 mark. And of course, this 1310 mark on S&P corresponds with this 50 moving average, really the zone of the 50 and 20 period moving averages. Next support we would expect to see would be somewhere near the uptrend line and the 200 period moving average, if we do in fact break this swing low. And then after that, we would be looking at the next swing low as a support level. And you can see that we held support back here at that level, and of course here. So we could be in the makings of a trend reversal. We certainly don't know that yet. But if the market were to sell off and set a new lower low, as compared to this previous swing low, if we have a lower high here, this was the highest high, lower high here. If we set a lower low, then we would expect an intermediate term trend reversal. We would go from being just in a pullback mode to what we would consider more of a correction, maybe a 20 or 25% correction in the market. So once again, we strongly recommend caution on the long side of the market, and we will be looking for short opportunities in the event of any bounces, particularly stocks that have broken below this 200 period moving average right here. If you enjoyed today's technical presentation, please join us at www.morpheustrading.com, where you can sign up for your free membership to receive technical plays like this every day. Thank you for joining us today.